What exactly is the market doing? Well, I'm here to let you know I have no idea. But what I can tell you is, my name is Jerremy Newsome, and I have been trading for 12 years, 8 of them with real life trading. The first 4 years were absolutely horrendous, terrible, and despicable in every single way, but I learned tons of things of what not to do. And what I'm gonna do in this video is give you about 6 minutes of some things that you also want to avoid. First and foremost, do not buy call options on downtrending stocks. What, might you ask, is a downtrending stock? The answer is pretty much anything tech. If it's tech, it's in a downtrend. Even Google. Even though Google is was at the 200 simple on a weekly chart. Yes, if you bought a call right here, you had about 2 or 3 days to sell it before you were profitable, but Google is indeed in a downtrend. You do not want to be buying call options in downtrending stocks because you do not know how long it's going to take for the trend to reverse. That is the truth. Once a stock breaks and closes below its 200 simple moving average, which essentially is right here on Google and many other stocks, that's when it's said to be very, very cautious about being in strong, long delta positions, meaning you're only directionally bullish. Yes, you can definitely make some money doing it, but it's more caution that's needed than just blindly buying call options. Number 2, make sure that you're doing your best to be as patient as possible. This is going to be a really, really good market for very fast swing trading or day trading, but longer term swing trading over like many weeks and many months will be pretty challenging. So first and foremost, with Uber as a great example, we set up a trade that looked a lot like this about 2 or 3 days ago. The reason I say 2 or 3 days ago is, well, that's how long it took for it to really kind of play out. This is what the trade looked like when we set this trade up on Uber. You had a bearish high wave candle that had gapped up. Now notice this is a bullish gap and go. And you had a indecision candle. The very next day it gapped down and closed below the 200. This is a setup that you'll get a lot, but when you get this setup, look to short the retest of the high wave candle and place your stop above the high wave candle. The very next day, boom, it filled. This day it gapped up, didn't panic. This day it closed below, and then this day it hit the target. It wasn't a very, very long trade, but keep in mind, this is what you're looking for. Everything right now is kind of moving differently, which is fantastic. Keep in mind, XLE, the energy sector. The other thing I've learned, do not buy high. Don't chase high. It only took me a few years to learn this, but when you are looking at your resistance levels, do not chase. Notice, boom, good resistance in 08. Bang, here in 2022 and right now. Yes, XLE has gone a little bit higher, which is the energy ETF, but today, when XLE opened, it was a very, very nice gap and go that trapped all the buyers from yesterday. Day trading will be phenomenal for the next few months, ladies and gentlemen. Volatility is here. Now, trust me, I know tons of people are back at work and you're making that money. You're doing great with your family. You're bringing in income, which is exceptional. That's exactly what I want you to do. But figure out ways to carve out time for day trading and just be patient. Draw out your levels and see, is the stock gapping above or below the prior high or low? Is it taking out the prior high or low? And wait for your setup. Case in point, here's AMD. AMD just yesterday had a really, really nice indecision candle. Today we opened below the low of yesterday. That is a signal that there's going to be momentum. You don't necessarily need to know what direction the momentum is going to be in, but you do need to know that there will be some momentum with a gap like that. Here on the 3-minute chart, if you are playing AMD, you're doing one of two things. You'll notice here at pre-market, before market opens, let's do a quick run through of the opportunities that are here for this day trade. This is your before market open. You already know that we're gapping below the low of yesterday's indecision candle, and the first candle you get is this. Huge upper shadow with a little tiny lower shadow. This is actually a great shooting star candle, allowing you to enter there with a stop above the high of today or the high of that candle. But if you don't play that, it's okay. After this big sell-off, what you'll notice and you'll remember is that it was a bear candle gapping down. Therefore, wait for the retest. That's the other tip that I want to tell you. When you are shorting down here, when you get bear trends, the retracements are really, really powerful, but they're short-lived. They are scary, they look terrifying, they're huge, huge moves, but they do generally eventually roll over. So you want to still sell as high as possible. And in this situation, if you were shorting at pre-market low, your fill would have been delicious. Check that out. Bang. There is your pre-market fill. And again, your stop loss on this one most likely is probably above this upper shadow. But if you get filled here with that upper shadow there, and the next candle that comes in looks a little bit like this, your stop loss is probably maybe 62.50, 66, 60, something like that. And you're able to hold through a nice little rollover. Another tip, make sure you study credit spreads. Credit spreads are going to be really fun right now in the markets, because if you don't know the exact direction, you can still potentially guesstimate what it likely will not do. Yesterday, when the Dow Jones ETF DIA hit 33333, I sold a 350-355 bear call spread expiring the 2nd of December and got paid 15% return on risk on that particular trade. Risking a decent sum of money to gain a decent sum of money is always a good idea. And in this instance, there was a lot of resistance in the way, specifically the 100 simple on a weekly chart. It was that plus the fact that the Dow Jones had gone up 15% in the last 5 weeks when the other markets have actually been going down. There's a really interesting comparison here, which brings me to number 4. In these markets, make sure you are reviewing your comparisons of other time frames when the Dow Jones has done this. So here's a really great example. Huge breakdown on COVID. We trade up into the 100. We broke below it, right? And then we got back above it. Could this happen again now in the Dow? Sure. Huge break, good move into the 100, retest, and then move higher. Both times we've hit the 100, we've actually failed it. We have not broken above it, closed, and then bounced like we did right here on the Dow during COVID. Now I want to take you to 2000, because I think a lot of us would agree that realistically, this doesn't really feel like a bad drop for industrials, but it does feel like a really bad drop for tech. Well, that's why I'm studying the tech bubble a lot right now. And if you're not doing that, you're doing something massively incorrect. Here's my overall thought. I actually think on the Dow Jones, we're probably right about here. Now, it could be wrong on that, but realistically, this could be the midterm push-up that we get from the elections, maybe on the Dow Jones ETF, and then we have a potential rollover. The NASDAQ is already making new lows. Tech stocks are already making new lows, and in 2000, when it got really, really bad, I'll show you a super fast comparison here so you can see that I'm just not being some weird lunatic. If I go over to the Qs in 2000 and I go to a weekly chart, just like the Dow Jones, and I go to the candlesticks and I pull up the long-term moving averages, we'll show you in 2000 what really, really was happening on a side-by-side note. So here in a weekly chart, notice my crosshairs. My crosshairs are going to move simultaneously. This move was already dropping, right? You guys see that on the right-hand side? We were already dropping on the NASDAQ. We had already at that stage gone down. Let me just check this to make sure. 2000, March 2000, which this time the markets dropped also March, but it was 2021 rather than 2000. We dropped all the way into, when is this? April of 2021. And what you'll notice is, what did the Dow Jones do? Look how strong on the left side of the chart the Dow Jones bounced. The NASDAQ also bounced, but we only bounced about 37%, which was a very, very small move at the time. And then we had one more bigger rollover. Now, this rollover on the NASDAQ was about 40% of a drop, and this move on the Dow was, again, approximately 27%. So the tech is going to move faster. That's just what tech does. It's built for speed. It's not industrial. It's not slow. But I do think that we're coming up into some very, very interesting price locations on the Dow Jones. I just want to take all that into kind of consideration. So that is really step number 4. Make sure you're reviewing your patterns and your charts in different time frames to just find, look for, and see some similarities so that you can create what you might do in any given situation. So for me, if we get this on the Dow, we trade up into 35,000 and we start showing any type of reversal signal, any type of weakness, that's where I'm going to go short. But for right now, I am bearish net on the overall market. We'll see what happens over the next 3 or 4 days. But if I'm going over here into the Qs, it does just in general looks like we've broken below the 200. We've retested the 200 with 2 bull candles. We had a new black crow at the very end of October. And right now, new month, new week, we have an inside week on the Qs. That to me says compression is building. And if we start making new lows in any time frame from here, it's going to get pretty ugly. And these are my 3 cases that I think that the cues could follow pretty closely. So far, we are already on top of 2 of them almost perfectly. We'll see what happens over the next 3 or 4 days, but I can tell you this, ladies and gentlemen, make sure you're day trading. I think it's an incredible opportunity. There's going to be so much volatility up and down. It doesn't matter. Find your strategy, find your system. If it's the 10 EMA system, if it's double bottoms, if it's double tops, if it's late in the afternoon fades, if it's early morning gaps, find out what your system is and keep exploiting it until you have about 7 losses in a row. And when you have those 7 losses in a row, lose small, review your system, and see if there's anything else in your toolbox that you can implement to make massive gains. If you need at any point in time other things, tips, tricks, strategies, or insights or tools in that tool belt, reach out to me and post in the comment section below, because team, I have a lot of them and I'm happy to help you any way I can navigate this market, but most importantly, obtain financial freedom for you and your family. I love you so much, and until next time, love life, and trade. Bye.